Hey there, this is David Poulsen with the Real Estate Edge. And I am here with a friend of mine just across the bridge there in Marin County is Mr. Paul Tollefson, who is an incredible lender. And we were talking, I was kind of lamenting to him how a lot of people are scared with all the news of the rates rising and so much change going on, prices going down, all sorts of stuff is going on, and they've stopped. And it's kind of sad because we're coming out of a market where I had clients that were writing 20 offers to get a house. They were standing in line and just all sorts of stuff, and they couldn't get into a house. And now I see it as a great opportunity, and nobody is has the courage to move. But I know from over 30 years experience in real estate, these little moments in time that you should take advantage of, and Paul's going to
Mhm.
tell you exactly what I'm thinking too. But he offered up a couple of great loan products to help both sellers and buyers, and I wanted to talk to him about that. So, hey, Paul, and Paul,
Yeah.
tell us about how many years you've been in business and kind of what you're doing and everything.
Well, I just started today. It's my first day. No, I've been in the business for not quite as long as you have, but long enough to see some ups and downs throughout the interest rate world. And we're in one of those times right now where your experience and my experience are really important to be able to help people understand that the opportunity, and actually you said it best earlier. It's like when people are running in one direction, you should be going the other way. You should run in the opposite direction, unless of course you're headed for a fire escape, and then in that case you want to be number one out ahead of everybody else. But it's so true, David, because we're seeing so many people that are having fear in the market because of interest rates and where they are today. And I think it's really interesting to dissect that and look at it at a granular level to try to determine what really makes sense and what we really should be afraid of.
Yeah.
Obviously, if you're right on the fence with what you can qualify for, and keep in mind, a year ago when rates were really low, people could qualify for a lot more house in a lot of circumstances. But there are a lot of people out here and who you and I are working with who maybe not be they might not be searching at the top end of their price range. They might be looking to downsize or to do something different, and it doesn't matter whether you're downsizing or it's your first home or whatever. Right now is a great time to get in because we're in this period of interest rates where they're high, and the market right now is slowing down as a result, which means there are fewer buyers out there in the market. What's going to happen when everybody that's waiting on the sidelines for rates to drop? What's going to happen when rates do drop to the market? Everybody's going to be out there again, going
Exactly.
crazy with multiple offers, and real estate is going to see the same type of,
Frenzy.
uh, of frenzy that we had before. Because here, I think it's interesting, and we should dive into some of the facts before we get
Well,
into
and
the program.
you still have to look at this market. We are low in inventory.
Right.
Yes, there is a little bit more inventory, but we are still low.
Yeah, we're at historic lows, and there's no real increase in inventory on the horizon because they're not building more houses, and more people are afraid to leave their houses. Excuse me for this. Are afraid to leave their houses because of the lack of inventory, right? Or they don't want to be out there fighting for something, and maybe we're seeing people who are staying in their homes because they have low interest rates. They don't want to jump into a new place or whatever the reason, and builders are scaling back on what they're doing as well, right? So there's fewer builders out there that are
Fewer new
um,
homes coming
right,
to
fewer new
market.
homes, right? And it's very misleading because when you look at the news and you see what's out there, it sounds like builders are on it and building numbers are up. But you have to keep in mind that when they show 8 months of inventory in the new construction, that's dirt. That's from the ground up, and actually completed homes that are out there on the market are less than 1 month. And that's what people don't realize when they're listening to the news.
Well,
So
we also know the banks are going to hold back on the starts that the builders can build too, because
well, and this is when you think about where we are today with the Fed increasing rate, and it's really important for people to understand that when the Fed is increasing interest rates, those are not mortgage rates; those are short-term overnight lending rates, right? So it does affect the mortgage world as well, but not to the extreme amount that it has happened. We've had 5.5 or 5 hikes since the beginning of the year with the Fed, and we're expected to have a couple more before the end of the year as well to help bring inflation down. But with that short-term money expense, that affects the builders, right? Because they're all working on lines of credit and whatever else, and so they're scaling back, saying, "Hey, money's more expensive. We'll just wait a little bit and see how things go." And I think it's important to understand what affects interest rates and why maybe we shouldn't be as fearful right now um, as as people are. You know, we're at a 40 plus year high on inflation. We're all feeling it right now.
yep,
Interest rates are as high as they've been since the beginning of the 2000s. When we saw
yep.
rates in the high sevens, and so all of those things, the culmination of those two things, have people panicked. And why are they high? Well, it's based on the mortgage-backed security market, right? The Fed is trying to raise rates, short-term rates, to bring inflation down back to 2%, because we're right now at over 6%, right? And we'll get more data next week to see how we're doing in that. But the way that it's been going with in what we call a yield curve, and we look at all these things, and we won't get too technical, but when we have what we call an inverse yield curve, we have rates that there's no place for them to go. Like the way mortgages are sold as mortgage-backed securities, they create what we call coupons, and the coupons are at the highest one that they'll have out on available. So rates aren't available above. And if you look at interest rates out there right now, everybody's pricing them with points and whatever else. Well, when are we going to see some improvement? This is one thing to think about. I love Barry Habib, who is a real estate economist. He's one of the smartest guys in the world when it comes to the economy and interest rates and what we should expect and what we should experience.
And we can look them up on YouTube or
You can look Barry Habib, Habib. You can look him up on YouTube. I'll shoot you a link to one of his recent talks that he had with a very prominent loan guy out of Washington. But Barry's talking about when are we going to see inflation correcting and starting to see things happen in the right direction. Jobs that, we got a jobs report today, and we have more jobs out there than we had. We're looking for less jobs for inflation to kind of go the other way. And the job market is a lagging indicator, meaning that it takes months to catch up. Well, in November, we're going to get the third quarter report and see how well all of the Fed's increases have been helping reduce rates. And Barry made a comment. He said he believes that we're going to see some movement in that direction, where we're seeing an improvement in inflation, or inflation coming down, even though we're probably heading into a recession. But we all know that during a recession, real estate does really, really well. And
yeah.
it's a great time to buy real estate because your money is most protected when you're, investing it into a home, for example. But let's talk about when we are going to see something happen. Barry is predicting that before the end of the years, we may see interest rates drop down into the low fives again. And for those who aren't following rates, they're near 7% today. But what does that mean if you're buying a house today, David? I mean, if you're out there shopping in the market, and we know that home sales have slowed a little bit, and prices have tapered off. We're not seeing the explosion in pricing like we had, maybe even coming back a little bit, or staying on par. So let's say if we don't see the appreciation we had last year, and we only see 1% appreciation, we're going to see some appreciation no matter what it is. But if you had a loan on a home that you purchased today, and let's say you got that loan at 7%, and we'll use that as a round number, the amount of interest that you will pay between now and 6 months from now, when you could refinance it, is really minimal in comparison to the appreciation of the purchase of that home that you'll have during that same length of time. So it makes sense to purchase now while rates are high, and not fight the crowd, so to speak. And then if
Well,
you're
and
working,
remember, so why I think this is a great time right now is because you don't have the crowds. In fact, sellers are scared. I think this is when you go in and you offer less, which if
yep,
you asked me 6 months ago, can I offer less? I would tell people there's no way.
yeah,
It only goes up.
yeah,
But this is a point in time where, in fact, we've been working with some buyers and have offered less,
yeah.
and we're getting our offers accepted.
It's very interesting because as you look at real estate that's on the market right now that have been on market for more than 30 days, here in Marin County, we're seeing a lot of homes, and some of the places in San Francisco I've been tracking as well. You've see a lot of homes that are taking 8 and 10% price reductions.
Yep.
That's a significant price reduction. So let's talk about how we can come into the market today with a couple of ideas that will help you win in today's market. The first one, you and I were talking about right now. Let's get the fear out of the market first. Our company, New American Funding, just created a program for our buyers. So people who purchase between now and the end of the year, we have a basically we're calling it our interest rate protection plan. And so if you buy right now and rates go down, let's say a year from now or 6 months from now or whatever, to where it makes sense to refinance that loan, we'll refinance that with no lender fee, and we'll contribute $500 towards their appraisal. So it's basically a no cost um, refinance when they get to that point. And as rates come down, of course, that this is a number one thing we have to remember, is that with interest rates and loans, you are not stuck in that loan for 30 years. Even though you take out a 30-year mortgage, you're going to find that you can refinance at any time the rate comes down, and a good lender that you're working with is going to make sure to reach out to you the moment he can save you money.
Well,
And
and actually, we just went through this, right? We saw
yep,
the rates go down and we had a lot of people refining. This is a normal thing that people do. And
yep,
like you said, you have a great lender like Paul. Paul's going to be on the phone to you going, hey, the rates have come down. Maybe you
yep.
should refi now.
Yeah, and think about all of the things, and we'll drop into a couple of strategies that we could use right now to help with the expense of purchasing. But think of what you could do. Let's just say you have a loan, and you're able to improve your monthly payment by $500 a month by refinancing 8 months from now. If you were to take that $500 a month and just apply it to the loan and pay down that principal, think how fast you'd pay that mortgage off over time, or develop even more appreciation in that home just by paying that down, using that same amount that you qualified for initially right now, and just keep paying it. That's one strategy to help really get ahead. But there are a couple of strategies that you can utilize right now coming in. We have a program with New American Funding called Buyer Accepted, And Buyer Accepted is a partner company that we work with that is owned by the same owners. We're a privately held mortgage company, and we're in almost every state. But this program is fabulous because it's a cash buyer program. So your client David could come into a home and maybe they're financing with 5% down. That's all they have. They could actually negotiate, and let's say they're looking at a $700,000 house, and they could negotiate a purchase price at $600,000 because they're paying all cash. And so how that program works is you and the buyer would negotiate that program or that purchase, and then Buyer Accepted will actually purchase the home cash, close in 10 to 14 days, and then initiate the loan after the fact for that buyer. So it secures the home for them quickly, allows them to negotiate, get a much lower price, and there is an expense to doing that or utilizing that program. But if you can save 8 to 10% on your purchase, and your cost is only 2%, that's a heck of a savings.
Well,
So,
and that's really good for sellers that are worried about. So I talk to a lot of sellers. Number one thing they say to me, great, I can sell my house, but where am I going to go?
right,
Because of the lack of inventory. So
right.
this really addresses that. Hey, look, we've got a good loan. You can go buy the house first, then we can
Yep.
sell your house.
Yeah, and that's one of the things we have. Like we have in that same program one we call buy before you sell. So we will not count your current loan. If you have a mortgage on that property, we're not going to count that against your debt to income as we qualify you for the purchase of the home that you're looking to move into. And the benefit of that too, David, is coming from a realtor's perspective, if your client can actually move before they list the property, it does a few things. One is it avoids the need for that seller to have to rent a property in the meantime while they're looking. It also allows you as the agent to come in and professionally stage the home and get the max out of that purchase or that sale that they can. A lot
Yep.
of times we find that when owners have their own, I their own furniture. I mean, if you had my furniture in a sale, I'd lose 100 grand just by people looking at my furniture. So
No, that's true.
but
That's
that's a
true.
nice thing about that, when you can buy before you sell without any real consequence to your qualifying. It's really strategic. And then being strategic, I think right now is really important in our offers. So every offer that we look at now, we're looking at what's going to make the most sense. If we come in and offer less money, use maybe the Buyer Accepted program, pay all cash, and get a savings, a substantial savings, is that going to be net better for the client or buyer than, for example, using something we call a seller buy down strategy, where we might look at a seller who has something on the market, and instead of buying it at a discount or asking for 100,000 off the loan, we might say, hey, we will give you full price, but we would like to have a seller concession to help us buy our interest rate down. And then a lot of times, and almost 100% of the time, if you're coming in with 20% down, we can get that interest rate down to comparable to where it was at the beginning of the year, save the borrower hundreds, if not thousands of dollars a month, depending on the size of the purchase, in interest expense, and have a mortgage that's similar to what it would have been last year, and it puts more money back in the seller's pocket. They're super excited when they're looking at negotiating with somebody, that they're going to actually win on the deal as well. So it's a win-win for everybody in that case.
I think so. Most of the people, when I approach them, I ask them, what are you paying in rent right now, or what is your current mortgage,
Mm-hmm.
and where do you feel comfortable for that mortgage payment? And we kind of reverse engineer it, right? So
Right.
I'll go to you and say, hey, look, clients feel comfortable at X amount of dollars per month. This is what they're doing now. They know they can do it. Tell us how much house they can afford.
Mm-hmm.
And so that's how usually we do it. And then you, because you know all these different loan products and different ways to save them money, you can find the right one so that we can achieve their goal. The
Yeah.
other the other thing I like to do too is, and I tell most people want to see the brand new house that came on the market today.
Yeah.
And I tell them just the opposite. I if it's me, I would look at the one that sat on the market for 3 weeks, 4 weeks, because you know that seller is watching the news and they're scared. And sometimes even the agents on the other side are scared too.
Yeah.
And
That's correct.
that's where you take advantage of the situation. Like I said, we're in this bubble. And, according to Mr. Habib, till the end of the year, or the beginning of just the beginning of next year. And then you'll have to go back in line and compete against offers again.
Yeah, and the
And
springtime I think is going to be really hot.
I think so too.
I think the spring market is going to be very hot this next year. You said something there. Just another strategy that we've worked with some of our clients here, with some of my other realtor partners as well. Is we are doing exactly what you said. We're looking and I track. I have a list of of listings that I keep for Marin County and for San Francisco County, and I track them weekly, and I can see how many days they've been on market. And as there's a price reduction, and we'll just use a number for example, again going in, maybe it's listed at $1,050,000 and they reduce it to $995 or something like that. That's a really good opportunity for a buyer to come in who can afford that $1,050,000, but come in and say, we see that you have the price reduction. What we'd like to do is offer you the full original price, $1,050,000, but we'd like that whole 55,000 back in seller concessions to buy our interest rate down and cover our closing costs. So the seller gets their $995 that they're asking, and the buyer gets all of that interest rate, correction by the buy down, plus have their closing costs covered. It saves that buyer substantially more money than if they were to even ask for $100,000 off the price. And that's a great strategy because you can start picking the homes that that one right there is worth what it was listed at last week, and they've reduced the price. Let's go in and use this strategy and try to get it down, and that's
Yeah,
one way to do it. So
that is incredible. So, people want to get a hold of you, Paul. How do they do that?
that's a good question. You can always call me directly. My number is I don't know if you're going to put it in the notes here, but it's 628-288-9977. And you can always find me at tollefsonlending.com or paultollefson.com. That works as well. And that will take you right to my website. But let's see, what's another way? Instagram.
Oh,
Yeah,
yeah.
I am at Marin Mortgage Guy on Instagram, and Paul.Tollefson on Instagram also. Those are two ways you can find me.
Paul is all over social media.
I am. See, my name is right down there on the bottom of the screen. You can just put a dot between Paul and Tollefson, and that's it right there.
So
So
if,
got it.
so if you have loan questions and need loan answers, give Paul a call. I do all the time. I'm constantly picking his brain to see how I can help our clients, and he's usually got a great answer for us. So thank you, Paul, for today.
Yeah, thanks
Uh,
for having me.
and I look forward to having you back again. And when you got some new loan products, or we got some war stories, or anything like that. But thank you very much.
Yeah,
Um,
I
and
will
you
tell
work
you.
all over the country, right?
Yeah, we do. We work all over the country. I will tell you, by the way, just, if you look at our logo here, New American Funding, I just have to share with you how proud I am. I know EXP has done such a great job with their new. I mean, it's such a great company as well, and we actually partner with EXP on our buyer accepted program. We are a direct
Oh,
partner
great.
with EXP. But here's the thing that I love about this company that's so fun. And I just moved to this company a few months ago, but they're individually, we're privately held by a couple who own this company, and we service our own loans and we take care of the clients. So when you do something with us, you're gonna be with us for good, and that's the thing that's really comforting sometimes as well for clients. But you can go online and look at New American Funding and pop my name in there, and I'll pop up there as well. So
Cool. All right. Well,
hey,
thank you, Paul,
you bet.
and
Thanks a
thank you,
lot, David.
everyone out there. Take care.
All
Bye bye.
right, talk to you soon.
Bye bye.